Hello, everybody. Thank you for joining us for today's public webinar. Good morning, Jim.
Good morning. If you've been with us before, you know we always start with a commercial. We do these webinars in order to draw attention to the educational programs that we have coming up. The next program we have is called our primer, and that's our low-cost course that allows you to see how we teach and if what we're doing is something that you're comfortable with. It's a 8-day course. The first 4 days are linear, and in the last 4 days, we interface with the market, which gives you a better chance to see what I'm thinking about the market, and I can communicate to you through the live commentary different thoughts throughout the day. Jen, you can just kind of run very quickly through it, and then we'll go on to the.
Okay, I was just going to say, you can find our courses if you go to jimdaltontrading.com and you go to courses at the top navigation. You'll see that the primer is featured up at the top. You can then click on the link there and get the full page of details, and we kind of give you a little bit of an outline here of what types of things we'll be covering on each day, as well as the schedule is also posted there, so you can download this. So this is the timings of all of the webinars. All of the webinars are recorded in case you can't attend one live. Participants will also have access to materials for 3 months after the course finishes, so that you have time to go back and review. And it's also just important just to point out what makes the primer also a little bit different is on day 4, we do a plotting of the market profile exercise. So if you do not have market profile charts yet, we do go over an exercise where you can do it what I call semi-manually. And so you don't have to have charts. This is an exercise that we even recommend that even if you have charts, it's a great thing to know how to do so that you have a deeper understanding and appreciation for the for value. It just flew out of my head what I was going to say.
Well, as we get started, we have a free trial. Window Traders giving a free trial. Jen, you want to talk about that just very briefly, and then take me to
sure.
the
So Window Trader for the first time is offering a free trial for a month to students that are signed up for the primer, as well as have never subscribed to Window Trader. So those are the 2 eligibility requirements. You must be signed up for the primer, and you must also not have been a subscriber previously, and then you can take advantage of this. And we are having a couple of supporting webinars to help people get signed up properly for Window Trader, so that you can be set up and have your charts mirror Jim's, as well as the cost savings. Window Trader usually costs $285 a month, and so that's a savings of that. And then also with regards to the data feed that you'll need to power the charts, there's also, if you haven't subscribed before, there's also a way to possibly get a free data feed. So it's truly a great deal. Plus, we'll be doing some hand-holding to walk people through that so they can get set up for that. So if you've got any questions, by all means, shoot us an email at dalton@jimdaltontrading.com, or you can contact us at the phone number at the bottom of our website here, and I'd be happy to speak with you and answer any questions that you may have. Okay, shall I give you the screen, Jim?
Thank you.
Okay, there you go.
Okay, yesterday was an extremely unusual day. We talked to 2 very knowledgeable people throughout the day yesterday to give you a little better insight. One runs one of the major trading desks for one of the big banks, and another works very closely with some of the major hedge funds. The 2 things that we saw going on yesterday was that the hedge funds, the CTA, particularly the CTAs, who were short, they've been heavily buyers for the last couple of days, covering the shorts, and now they've gone from short to long. The 5% rise in the NASDAQ, that of course is just a huge, huge short covering rally. When it got to, once something like that gets started, the thin stocks, and it just keeps going. It was unbelievable. It's one of the most unbelievable things that I have seen. The other thing, talking to this one individual last night, said that a lot of the institutional hedge funds have been doing some fairly sophisticated work, and what they were seeing was that the broadening out of market participation, and that broadening out market, well, was kind of quiet beneath the surface. That broadening out, they saw as very positive and brought them into the market. I have been doing this for 50 years. I have never, that I can recall, seen a rally, or not just yesterday, but the last several days, and the gaps that we've had. I've never seen one of that magnitude and that thin. And I think the other thing that you find going on, what brings this around, is a lot of these money managers, hedge funds, CTAs, you're in the last part of the year and they're not profitable for the year, or they haven't made enough money for their clients, in order to be good, profitable businesses. So I think that when you get a rally started like we've had in the last few days, I think there's a tendency for them to pile on and fuel the market in order to, to be profitable going into the year. Not only profitable for the clients, but profitable for the clients is going to put more money in their pocket. I think that's a human reaction. Sometimes there's a price to pay for that, but as we know, a lot of times, people look at very short-term goals and objectives. So it's very difficult for me to be exact, because you can't prove any of this stuff. But it has been the one thing that, if you remember the last time that we had a webinar, I talked about the structure, but I also talked about the importance of CPI yesterday. And I said that, that can change anything in the market. And of course, that is what happened. You got, this huge CPI number, and the short covering was just underway. Now, PPI this morning wasn't as friendly. So they leave us in kind of a questionable state. If you look at yesterday's shape, it's kind of the P shape in here. And yes, the market was, crazy to the upside, but there's your P shape, which suggests that this was an awful lot of short covering. And you didn't even close near the high. Now you had really heavy volume, the heaviest volume I've seen in some time. But if you look at this shape, see how thin it is. I mean, you got this huge gap, and the market, of course, went immediately before the market opened. Huge gap with this big P shape, which is an indication that there was a lot of short covering, and there were a lot of people that were short the market. But I didn't see the evidence of new money buying in there. So it's a very dangerous market. Now today, we're going to open here in a little while. The NASDAQ, of course, the NASDAQ would still gap higher at this point in time. When we're looking at the ES, it's not quite as responsive to the market. So where we are, I've got multiple thoughts going through my head. And one, you don't fight momentum. As I've written and said so often, you may have a market going up, you may not like the market, but you don't fight the market. You very often, if the market's going to go back down, you're better off usually to be a little bit late rather than a little bit early. Momentum is a powerful thing once it gets underway. So right now, on today on the ES, overnight inventory is long. We have had some counter auction correction. We've got about 15 minutes till we open. The yesterday's volume, it's rare. Yesterday's volume, I think, was like 7.5 million the last time I looked. It is rare when you get that type of volume and a market retraces itself the following day. Can it happen? Yes, it's just rare. All right. Again, we would open within, yes, if we open right now, we're within yesterday's range. Overnight inventory is long. At this point in time, we've had some counter auction, but the odds say you get a counter auction overnight inventory. If you don't get that counter auction to the downside, correcting overnight inventory, then the odds are that the market's going higher. Okay, let's take some questions.
Are there any particular adjustments, rules to apply, or advice for someone that wants to trade during the overnight session?
The biggest thing that if you're going to trade overnight is understand that it is a totally different market. It's thinner. The references are, much weaker. The market tends to go to exacting references, but it's a weaker hands. And my suggestion, if you trade overnight, just follow what they're doing overnight, but don't get to the point where you believe that what you saw overnight is going to be what happens in the morning. It's a totally different audience. Okay, other questions?
Do you still think this up move is short covering and only old business, or are there any indications that this is old business and new business buying?
Oh, I think there's no question. It was, when you get 7.5 billion shares, I don't think there's any question it was new business buying. And as I said, a lot of the hedge funds, were looking at and the rally was spreading out. It was, it was deepening. It's not, being controlled by a few stocks. And one of the things that got them excited was that there were more stocks in the participation in the market. So I think there's without a question, I think there was some new money buying as well as short covering in there. But remember, the structure underneath this market is as weak as anything I've seen, but it can go on for a long time. It can go on for a long time. And remember, some of the money managers out there have ulterior motives at this point in time. It's late in the year. You've got less than, than a couple of months for the end of the year. They would like to make some money for the end of the year for their clients and for the clients that makes for themselves. That's life. Okay, what else we got?
Okay, I'll just bring up my screen real quick so you can review the volume real quick, Jim, because you made a comment and there was a question. Okay, can you see?
Yes.
Okay, so somebody was asking if you could comment with your perspective of the volume from yesterday since it was so much higher.
Yeah, I don't know. I saw one yesterday afternoon at 7.5. This says 4.7. 4.7 really isn't that big a deal for all we moved. I mean, it's high volume. It's high volume, but it's not the number I saw last night. I don't know what that was, but no, that's when you look at it here this morning, that's good volume, but it's not really high volume. Thank you.
Okay, I'll give you back the screen.
Okay.
There you go.
Okay. Questions?
Okay, which chart is better to analyze for long-term trends, the SPX cash index or ES continuous futures, and for the daily and weekly charts?
I don't, I think it's a personal choice. I think you can get too exacting on that. I use the continuous chart. Um, but remember, I look at uh, the daily, the weekly, the monthly, just to see what's going on. And I don't make a science out of it. I just want to have a good idea of what's going on. And like I said, when I look at this, it's clearly going up. It's been some of the most unusual buying I've ever seen when it's been taking place at exact references. For example, when this whole thing started, it left no excess. It was at the bottom of a gap. And it was, I mean, the buying was unbelievable. Early yesterday afternoon, the first came back to exactly half back. I mean, it was just huge, huge buying like a rock in there. And um, that is usually CTA type of buying when it's that mechanical. Okay, what else?
Okay. Could Jim address the question again about new buying since it was 4.7 billion and not 7 billion with regards to the volume?
Well, remember that's the NYSE and all the volume. It's not a particularly good. It's not a particularly good source of buying. Remember, a lot of the volume you don't see. Um, but I think when you've got the Russell up 5%, there obviously was a lot of volume going on in that market to put up that high.
I guess
So,
like because a lot of people are just wondering. So would you say that there was definitely some new money buying in there because of that?
oh, absolutely, absolutely. As I remember what I said to start with, I said a lot of the hedge funds, they were doing some studies, and the studies showed that, that the market participation was broadening out, and that's what they liked, and that's what triggered a lot of their buying. Yes, there clearly was new buying.
Okay. Somebody mentions the news that Michael Burry has taken off his shorts and off the indices. Um, and would you say that large money is panicking too?
No, I wouldn't say. Markets are difficult. Markets are difficult. There's so much irregularity in stocks that it's if you ever read Nissan Taleb's book, The Black Swan, he talks about the irregularity in the market. And because there's so many unusual things that take place, you're going to get more of these kind of panic moves and black swans and things like this. It's not the same as dealing with something that is far more predictable and has a lot more data. Okay.
Okay. Would you address the weakness with regards to weakness because of the number of gaps?
Oh, I mean, this is as many as I've ever. I think the most I've ever seen is 5. Um, but you get short covering. You get short
I think the
covering.
record, Jim, I think if I'm not mistaken, I think the record might have been 7.
Okay. I just
But
remember
that's
5. You might
crazy,
be. It's not
obviously.
a big deal. But 5 is what sticks out in my mind. But you well could be right in there. But the only thing that I say is remember when it starts down, whenever that is, it can go very quickly because there's no buildup where the market goes down and catches go down. These are very dangerous markets. I've seen markets go up, I've seen markets go down, and I've seen them reverse. And the way market has gone up, I don't think it's in the cards necessarily right now, but it's information we call carry forward, because at some point in time, the likelihood is that the market starts to break, and it can break very, very hard because there's not, there wasn't a point where the market would come up and balance an awful lot of short covering. But right now, and I guess I caution it, right now the trend is up. You don't fight momentum trends. When it's over, it's over.
Okay. Somebody was asking, in this past week ahead's video, you had a short bias. Has that now changed?
Oh yeah, I mean, I was looking at the market, and of course, when you get yesterday, I mean, you get a game changer like yesterday morning, you don't fight that. I mean, that's just sheer, craziness in the market. Um, And I just, you just don't do that. The momentum is up. And you can have it, you can have a bias, but realistically say, okay, I don't like what the market's doing, but it's going up. And, I'm not here to commit suicide. But do remember, when you get the Russell go 5%, I mean, there's some real buying in there. Okay. So now we're going to open here in about 7 minutes. We're going to open within, at least right now, yesterday's range. So what the first thing you're looking for today on a short-term basis is, do you go down and get through the settle? What's value going to be today? You've got that's what you're looking at. You're getting a little correction to counter overnight inventory. If you don't get a full counter of overnight inventory, then you want to go long. Okay.
Okay. Is it too late to join the rally, or do you think it can still be traded gradually?
Oh, I don't chase rallies, but that doesn't mean that, on a day time frame basis, as a short-term trader, all of a sudden you get the things that's okay, we're going higher. Well, then you go with it. Even though you might not like it on the longer term, as a daytime frame trader, your actions are relevant to what is going on today. Okay.
Okay. What makes a profile weak in structure? Is it when there are unfilled gaps or when there are single TPOs that show emotional buying or selling?
Well, it's going to be the shape. For example, if you look at yesterday's shape, it looks like the letter P. If you had a really good combination, really good buy, you'd be more elongated. This is an indication of more, short covering in there rather than a nice solid combination of short covering and new money buying. Now, it's hard to judge. I mean, when you look at how far up that market is, there's just a lot of people that don't want to chase something that far. So one day does not make a market. So you got to be very cautious. Okay.
Okay. Most of the up rally was made overnight. If there was new money buying, wouldn't you expect a more elongated regular trading hours profile?
I don't think there's people I talk to. I don't think there's any question that there was new money buying. I just talked to too many people. Uh, you know. Okay. What else we got?
Okay. Do you view the overnight high as weak since it's very near matches the high from September 15th?
No, I don't. I don't overthink it. Okay.
Okay. Would you
I'm going to say.
consider, oh, sorry.
Unless you got one final question.
Sure. Would you consider the J period low at the 4,500 as a pullback low?
Oh, I think you can do that. Yeah. Yeah, I think that's fair. Because I mean, it's exactly what it did, right? I mean, it went down and it was mechanical buying at that level. All right, Jen, I'm going to leave you to do a commercial and for people that have an
Okay.
interest in the primer, and I'm going to sign off.
Okay. Hold on. Let me
Okay.
take the screen back. Okay, so if any of you have any specific questions with regards to Primer, please type them in. I'd be happy to answer those. But for those of you that are new, maybe not so familiar with our website, you can sign up for our emails here. And you'll see at jimdaltontrading.com, we feature the Primer right there. You can click on there and you get the more detailed page, and it has kind of an outline of what we are doing there over the course of the 8 days, as well as the copy of the schedule. All of the times are posted in Eastern, so you need to adjust for your time zone. All of the webinars are recorded in case you're not able to attend one live, and you'll have access to materials for 3 months after the course finishes so that you've got time to review, and we always encourage that. But it's a great course for those of you that are new to market profile, or maybe you already have some knowledge, but you're looking for more in-depth knowledge. Maybe you've read one of Jim's books, or you've heard about him, and you want to find out more about how he teaches and observes and analyzes the market. This is a great course to figure that out for an inexpensive price. And we know that a lot of traders in the past have been burned by expensive trainings. for which maybe they feel they didn't get enough value or learn that much from it. So if you're looking to jump into market profile, it's a really great course to learn directly from Jim. You know, some of these foundational concepts. The first 4 days are linear teaching portions that we take from our foundation and application of the market profile e-course. And we teach that linearly for the first 4 days. And in the latter 4 days, we provide daily reports, which is our form of homework. And Jim will be narrating the market live to show you how all the different variables and pieces come together, how he views context coming into the day, etc. It gives you a really good idea of how he observes the market and puts all those pieces together. Let me see a couple of questions here. No, we don't. We don't sell old live programs. And like I said, if you are a participant of this primer, you'll get access to the materials for 3 months so that you have time to go back and watch them. And we do have a lot of international clients that can't attend the sessions live, or folks with day jobs that can't attend the sessions live because of the timings. And so, they watch the recordings after the fact and they join us live whenever they are able to. Is the primer format similar as a previous one? The answer to that is yeah, the overall format is similar. Obviously, we do these live via webinar online. They're not done in person. I had a few people email me in and ask, is this a live course done in person or via online? So it's via online webinars, and that's why, like I said, we make sure that we record all of them. And yes, the primer starts on December 6th and runs through the 14th. It's an 8-day course. If you look at the schedule here, we do have one session on a Saturday morning. And if you're wondering what are reinforcement of concept sessions here, it's basically where people who are in the class, the material that we've gone over already, because it can feel like it's a lot. And so we give plenty of opportunities to ask questions and come back to get clarifications on those questions. So on those concepts. So that's what those reinforcement of concept sessions are. And then on that Saturday, we do a reinforcement of concept sessions first, and then we'll do the plotting of the market profile exercise semi-manually, so that people can learn how to do that. And like I said, that's really great if you don't have market profile charts yet, or maybe you don't want to pay for market profile charts. And it's also great, even if you have charts, we still recommend people to do it at least for a short period of time, because you just get a much better appreciation and understanding for the concept of value, which too many traders, they know the definition of it, but they don't have much beyond that surface level definition and understanding of that concept. And it's a pillar concept, obviously. So if you've done a primer before, is there a discount if you want to do it again? Currently not. It's a really inexpensive course. Purchasing early is always going to yield you the best price. So right now till Sunday, November 19th, it's on sale for $419. And if you're new or you've never had Window Trader Blue before, and you want to check that out, now's a great time for that, because we're also going to have a couple of the support webinars to make sure people can get set up and signed up properly for that. And that's something that we haven't done before as well. So, okay, I will sign up. I really enjoyed the intensive. Thank you so much for that. Yeah, the last intensive we had, that was really something special. I have to say it was definitely different. Okay, well, I think I got to all the questions that we have for now. Thank you so much for joining us. If you've got any questions, by all means, please contact us, shoot us an email at Dalton@Jim Dalton Trading, or give us a call. I'd be happy to speak with you and answer any questions that you may have. Okay, thank you and have a great rest of your day. Happy trading. Bye-bye.